Assalamualaikum, everyone. Today is November the 7th, 2021. Welcome to Wall Street to Bay Street Sunday Chat with Sharia Portfolio Canada. My name is Nadeem Mia.
And my name is Sajjad. Get your chai ready and let's start to talk about the big meeting, big Federal Reserve meeting. The first question, Nadeem, what is QE program and tapering?
Well, since the start of the pandemic, the Federal Reserve, along with many other global central banks, started an enormous buying program of government bonds and mortgages. These purchases were known as quantitative easing, or QE, and they were really intended to keep interest rates down and increase liquidity in financial markets during a very difficult time. Since February of 2020, these purchases caused the Fed's bond holdings to rise by $4.4 trillion. So on Wednesday this week, the Federal Reserve announced its intentions to start dialing these purchases back. To be clear, the Fed will still be buying a lot of bonds over the coming months, but after buying $120 billion worth of securities in October, the Fed will now buy $105 billion in November and $90 billion in December. Now, this is the pattern that most economists think that will eventually stop. They'll stop these purchases totally by the middle of next year. Now, north of the border, the Bank of Canada ended its QE program prematurely by tapering its purchases to $0 per month. It was widely expected to taper to $1 billion per week or from $2 billion per week. But the Bank of Canada will now only reinvest its existing balance sheet. So that's well above the Bank of Canada's target.
Great. And what's the impacts of tapering on the market?
Well, one view is that, central bank support has been the main catalyst of the bull market, not just recently, but going all the way back to the global financial crisis. Markets, after all, have done better when the Federal Reserve have been buying bonds, but and we've heard phrases like, the market is only up because of the Federal Reserve. But this idea needs to be taken with a grain of salt, in my opinion, because yes, the markets have done better when the Fed is felt that it needs to support the economy. But the Fed generally feels this way when conditions were bad, and bad conditions often meant prices were lower. So something that was true, and say, like, for example, in 2008 or March of last year. So you're in a situation where sometimes you're buying when prices are low, and that tends to produce superior returns.
Can you tell us what happened the last time we saw tapering in the market?
Sure. The last time the Federal Reserve started to dial back its purchases after a strong year for the markets in the economy was in 2013. The Fed started to taper its bond purchases actually in January of 2014. And that turned out to be a bad month for the markets. But the reasons were, were related to U.S. data, but there were also like weak numbers out of China, and there were some problems in the emerging markets at that time, including Argentina. But overall, 2014 turned out to be a reasonable, positive year for stocks. So 2014 could provide us an important clue for how markets could respond to tapering. But the important thing here is, as the Fed becomes, and central banks, not just the Fed, but as the central banks become less engaged in the markets, fundamentals will matter more and will become a larger factor on whether markets will either drop or rise.
Okay, thank you so much. That's all the questions that we had for this week. Thanks for joining us. I hope you have a great weekend. If you have more questions, feel free to put in the comment section below. See you next week. Assalamu alaikum.
Wa alaikum assalam.
Nadeem Mian, Portfolio Manager, registered as an advising representative, and Shamil Devji, Financial Advisor, registered as a dealing representative with Sharia Portfolio Canada Inc., a portfolio manager registered in the provinces of Ontario, British Columbia, and Alberta. Their opinions and statements expressed in this show are their personal opinions and do not necessarily reflect those of Sharia Portfolio. They are effective as of the date of this broadcast only and are subject to change. This discussion is for general information purposes only and is not investment advice.